Hey, welcome. Today, we're going to pull back the curtain on one of the most powerful tools an investor has, the stock chart. We're going to learn how to see the patterns, how to read the story the market is telling us, so you can stop guessing and start, really understanding.
Does that sound familiar? I think for a lot of people, the stock market feels exactly like this. Just a giant casino where you throw your money in, cross your fingers, and hope for the best. It feels so random, so unpredictable, and honestly, it can be kind of scary.
But what if I told you that all those squiggly lines on a chart aren't random at all? They're actually a record of human emotion. A stock chart is a story. It's a story of fear and greed, of buyers screaming yes and sellers shouting no. It's basically a map of the market's collective mind.
Okay, but this is a super important point. Learning to read charts is not about becoming a fortune teller with a crystal ball who can predict the future with 100% certainty. No way. It's about becoming more like a weatherman. A meteorologist doesn't know it's going to rain tomorrow. They see patterns in the data and they forecast a probability. And that's exactly what we're learning to do. See what's likely to happen, not what's guaranteed.
So, how do we even start reading this emotional story? Well, we've got to start with the basics, right? In this first part, we're going to learn the simple language of trends. Think of it as the basic grammar of any stock chart.
So, the simplest and happiest story a chart can tell is what we call an uptrend. All it is a pattern of higher highs and higher lows. It means every time the price goes up, it hits a new peak, and every time it pulls back, it finds buyers at a higher price than before. Just picture a beautiful staircase climbing steadily upwards. And what this shows us, really, is pure optimism. An uptrend is visual proof that the buyers are in control. They see value, they like where the company is headed, and they are willing to pay more and more for it. The market is just shouting, yes.
But of course, no trend lasts forever. The party has to end sometime. The good news is, the chart itself often gives us little warnings that the mood might be changing. So let's look at the first major clue that an uptrend might be running out of gas.
It's called a double top. And yeah, it looks pretty much exactly like the letter M. It happens when a stock hits a high price, pulls back a bit, and then rallies right back up to that same high price, only to get rejected for a second time. Some traders have this dark but memorable little phrase for it. M stands for murder. Why? Because it can absolutely kill a healthy uptrend. The psychology behind this is what's so fascinating. That first peak is the market saying, whoa, okay, maybe that's too expensive for now. But when it tries again and gets smacked down at the exact same level, that's a much stronger signal. The market is basically saying, listen, I'm serious. No means no. A powerful price ceiling, what traders call a resistance level, has just been formed.
But here's a really key distinction. A double top is not a guarantee that the stock is about to crash. It's an alert. Think of it like a fire alarm. When you hear a fire alarm, you don't know for sure there's a fire, right? But it definitely gets your attention. You become cautious. A double top is the market's way of telling us, hey, pay attention. The story might be about to change.
Okay, so we've got an alert. Now what? Well, after an alert, we need to look for confirmation. Is this a false alarm, or is this for real? There's another classic pattern that often shows up right after a double top, and it acts as a really powerful confirmation. It's got a great name, the kiss goodbye.
All right, let's walk through this because it's so important. First, you have a support level. That's the price floor, where buyers had previously stepped in and said, yes, this is a great price, I'm buying. Then, step 2. The price actually breaks below that floor. But the real magic happens in step 3. The price tries to rally back up to that old floor, almost like it's testing it one last time. That's the kiss. And if it gets rejected there, like in step 4, that old floor has just become a brand new ceiling.
So the kiss goodbye is so powerful because it confirms the market has had a total change of heart. A price level that buyers used to love and defend, they now reject. That transformation of support turning into resistance is one of the most reliable stories you'll ever see on a stock chart.
Okay, so we've covered the uptrend, the double top alert, and the kiss goodbye confirmation. Now let's see how this all comes together in the real world. We're going to put all the pieces of this puzzle together and solve a real case.
And here it is. This is a chart of the NASDAQ index from the peak of the dot-com bubble back in 2000. Now, to the untrained eye, this just looks like chaos, right? A huge spike up, a sharp fall, another rally, and then a total collapse. It just looks like a bunch of noise.
But you're not an untrained eye anymore. You know the clues now. So before I show you, just take a second. Look at this chart. Can you spot that big M shape? Can you see where the market might have given an old support level a little kiss goodbye? Can you see the story playing out?
And there it is. The market topped out in March, sold off hard, and then shot right back up to almost the exact same level before getting slammed down again. That is a massive double top, the M for murder. That was our alert. Then it broke support, rallied back up to kiss that old support line, failed, and started one of the biggest bear markets in modern history. That was the confirmation.
And this is just such a perfect example of why this is so powerful. The story of the dot-com bust wasn't just some random chaotic event. The clues, the warnings, they were right there on the chart for anyone who knew how to read the language of the market. The change in emotion was right there in plain sight.
So let's just end on this thought. Can you make the stock market go up tomorrow? Can you stop your favorite stock from falling? No, of course not. We can't control the market, but you have absolute 100% control over one thing, your strategy. By learning to read these charts, you're not trying to control the uncontrollable. You're simply choosing to control how you react to it. And that, my friends, changes everything.